We also have Sandip Sabharwal who's joining us, along with we have Kunal and Nuresh also, who are standing by very patiently. But very good morning to you, Sandip. Thank you so much for joining us. And we're just talking about the insurance space, given the fact that the murmurs around the fact that they are going to look, or the government or the IRDA regulator is going to look at capping that limit when you talk about the bank insurance channel. And you saw a lot of these life insurance companies react to that. How are you looking at this insurance space, or the relative or the news related to that space right now?
There are two things in this. One, the overall performance of the insurance companies as such. The insurance was supposed to be a sector, supposed to grow rapidly because of low penetration. The companies are supposed to make decent margins, but many of those stories have not planned out the way it was expected. Growth has been moderate, profitability has been up and down, and very unclear on the entire VNB and the accretion to the overall valuations of the insurance company. So I think this news flow is not so fundamental because see, one channel restrictions are placed. So if the growth is there, it can go through some other channels. But I think the bigger issue for insurance companies as long-term wealth creators has been the other fundamental parts, and those I think keep the sector down. So I don't find the stocks in the sector exciting per se.
Finding them exciting, at least at the moment, that's the word coming in. But what's been exciting of late is the entire action when it comes to the hospital space. Of course, that news coming in as far as Aster DM and that potential deal with Blackstone is concerned. And the other one that we're tracking is Narayana Health, which is looking at a bit of an acquisition spree as well to beef up its international business. Do you track these ones closely, Sandeep? And a word on the hospital space?
Yeah, overall, hospitals as a space has been doing well because of the fact that they have got significant pricing power. People want to go to the known chains, and because of the penetration of insurance, the preference of people to go into established hospitals and spend as much as required because they are covered by insurance has been increasing. So I think the overall space is well placed long term. Near term, given the way many of the stocks have moved, like the leaders sort of like Apollo Hospitals, Fortis, etc. So the valuations have become a bit excessive. So I think that's the near term concern. Narayana, of course, it's not the valuations of Narayana have remained a bit subdued vis-a-vis the rest of the hospital. So for them to go and acquire, make a large size acquisitions in a developed market is slightly intriguing, and to that extent, I would think that it would not be incrementally positive for the near-term stock price movement.
All right.
But Sandeep, what's your sense on HUL?
So, like most of the FMCG companies, HUL has also corrected over the last few months. So, there was an expectation that there'll be a revival of consumer demand post monsoons. But that revival obviously has got delayed. So, we've seen, like you were discussing about Britannia, the way Britannia plummeted, or you see across the board, Tata Consumer, HUL, Daba, all of them have fallen 20 to 30% from the top. So normally, when most of these consumer stocks fall around 30% from the top, it does become a good level to buy because these are long-term growth stories. And after 2 years of slow consumer demand, a consumer demand revival should be imminent at some stage. And once the revival starts, it usually would last 2 to 3 years. So I would think these are reasonably placed. Upside to downside uh, reward to risk should be favorable. HUL, I was looking more near 2200, 2250 to buy. Let's see how it goes. But I think many of the other names also seem to be offering a reward to risk where downside risk could be 5-7%, but upside could be 15-20%.
Right. Sandeep, a very interesting note this morning coming in from Citi when they are talking about Divi's Laboratories, where they believe that Divi's is their top pick in the Indian pharma space. They believe that it is well poised from a tactical as well as structural point of view when they talk about a growth in their Entresto API or even the contrast media pipeline going ahead. So they are expecting upgrades coming in for this particular counter going ahead. But what's your take on Divi's Laboratories? Because this one has had a very, very rough patch in between, isn't it?
Yeah, so the performance of the company has been volatile. So it was a company which did very well for many years. Then it went through a rough patch for some time where the management continued to guide for higher profit margins and growth, but it did not come through. And now we are again at a point of time in the cycle where some of the products which it has developed in collaboration with uh, the larger pharma companies could go into commercial operation, and next couple of years could see growth coming for that. So I think that's led to the optimism and the way the stocks moved. So the stocks moved up substantially. So the challenge is to buy the stock at levels where the valuations are excessive, and then a period of slow returns from the stock could start. So I think people should wait out. For many of these stocks, it's better to wait out for some bad news, some bad result, or where the stock on such news tends to correct very sharply and then take an exposure rather than take an exposure when it's trended up so sharply.
Right. Like you said that you will wait when you talk about DVs, but in the pharma space, any stock that you're liking or you're liking that space right now by any chance, Sandeep?
In pharma, the stocks which we have traditionally liked and which we have held include Sun Pharma, Lupin, etc. Those, so among the larger names, I invest. I don't invest so much into smaller pharma companies because I find it tough to evaluate their business model as well as uh, challenging to evaluate some of their balance sheets where cash flows don't seem to be there, but profits get reported. So I think I would like to stick to the larger names from my perspective.
Sandeep, what's the view on auto stocks? We'll of course watch out for them today because we are looking at the numbers of November, and overall street is expecting a bit of a moderation when it comes to the passenger vehicle sales. I'm just going through a Nomura note. We're just talking about only a 2% year-on-year growth on passenger vehicles. Two-wheeler is expected to see a growth of around 3%. It is tractors which is expected to see a growth of around 10%, and MHCV, which is medium and heavy commercial vehicle, is expected to jump up in double digits as well. What's your take on the auto stocks and what kind of expectations should we have with respect to the sales?
Sales expectation, I can't comment on because they are all over the place. But I think what will be important for as drivers for the stock prices will be that the October sales on the retail side were very strong, but there have been questions around inventory in the system. So how the wholesale dispatches pan out in November and whether the start of the marriage season has contributed somewhat to revival in growth and the cash flows coming to the rural markets has contributed to some sort of sales revival or the sales remain muted is a critical picture. So the expectations are very muted. Stocks have corrected. So if the actual delivery is somewhat better, we could see the stocks actually do better. So I would think that overall as a space, the downside risk is low in the auto sector at this point of time, unless and until the numbers totally uh, completely disappoint by a very significant margin over the current muted expectations.
Okay, so that's the take coming in. The risk reward skewed a little more towards the downside as far as the auto sector is concerned. But Sandeep, would you have a view on these battery companies? Exide and Amara of the world. Exide, of course, has been excited of late. We have been seeing that consistent 2 to 3% up move, but the stocks have run up massively. Do you still see scope of a re-rating or an up move in some of these names?
I think the re-rating driven by the requirements of storage, batteries, etc., has more or less played out in my view. Now it will be a question of delivery because these companies have been investing very significantly in setting up new battery facilities, new storage battery, lithium, iron, and other that. So how the demand actually pans out, what are the returns they earn out of those investments, and whether there are technological shifts that could threaten those investments. So I think it's a very evolving industry. So the markets have given them significant upside because of the investment cycle. Now we need to see the actual results come out, which are still to come out.
Okay, the actual results of outage are still to come out, but yes, the necessity and the opportunity is still there. Let's talk about some of these defense companies as well, Sandeep. If I look at the 5-day moves on, let's say, Bharat Dynamics, it's up 26% last week. Garden Reach is up 25%. Cochin Shipyard is up 20%. So that decline that we had seen of anywhere between 20 to 40%, they've recovered at least half of it, if not more. What's the take on some of these defense PSUs now?
Yeah, we were discussing this a few days back, and I said that the PSU segment overall seems to be ripe for a bounce, and I think that's what is playing out. These stocks fell substantially, like many of these stocks fell as much as 50-60% from the top also. So at that those levels, obviously value got created. Now there are various categories of PSUs. Among them, obviously the defense ones are the strongest placed. Railways is going through a phase of somewhat lower investments vis-a-vis what the cycle was over the last few years. So that's where the story has become muted. But on the defense side, we could still see some upsides in some of these companies.
Right. Sandeep, let's talk about the IT space. How are you viewing the entire IT space at this point in time? We've seen this one actually have a huge knock in yesterday's trading session. But leaving that aside, how is the IT space looking to you? Do you think that this one also will be among those leaders going ahead, at least fundamentally?
Yeah, IT has had a sharp up move, and it's been an outperforming sector vis-a-vis many of the other sectors. In the expectation that 2025 will mark a revival in demand. And you leave aside the larger IT companies, many of the mid-sized ones like Persistent, Coforge, etc., are actually trading more near all-time highs and at valuations which are much higher than historical valuation. So I think now it has to come to delivery. So whether that demand revival comes through at the pace at which what people are expecting will be the key. So overall, I think the sector is fairly valued without much upside expectations. And I'll watch out for next quarter result commentary to take a fresh view.
On that note, we let you go. But yes, IT stocks have been outperforming and poised for a bit of a leadership. Thanks, Sandip, for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.